Hi, I'm Randall Place, a partner with the law firm Place & Hanley, LLC in Naples, and I'm here to discuss how to select a stockbroker. First, I suggest that you do not open an account from a cold call. These can come from boiler rooms, where a group of people target unsuspecting victims. If you saw the movie Wolf of Wall Street, where Leonardo DiCaprio played the infamous swindler Jordan Belfort, you know what I mean. Cold calling was Jordan's forte, and he promised to deliver too good to be true returns. Of course, if something sounds too good to be true, it probably is. A better way to find a broker is to ask a friend or relative, and then check out the broker's credentials through the Financial Industry Regulatory Authority, better known as FINRA. Their website is www.finra.org. It's free to check. And here are some red flags that should warn you away. Negative termination comments. A history of working for broker-dealers who have been terminated from FINRA memberships. Brokers who have worked for bad broker-dealers often learn bad business practices themselves. Regulatory actions taken against the broker from the SEC, FINRA, or the Florida Office of Financial Regulation. If the broker passes this test, ask some questions before you invest. How does the broker make a commission? Is it transaction-based? This means that every time you buy or sell a security, you are charged a commission. Know how much the commission is and understand the more transactions, the more commissions you'll be paying. This type of commission arrangement often works well if you're not going to be doing a lot of buying and selling. Or is it fee-based? This means that your broker is charging you an annual fee or percentage of your assets to manage your account. For example, the fee is 1% annually. Then you'll pay $1,000 per year for your broker's advice on a $100,000 account. Understand that many times you can negotiate this percentage, especially if you have a very large account. This type of commission structure works well if the commission charged on the transaction you conduct in a year exceed the annual fee. But always ask if there are additional transaction charges in a fee-based account. If your broker tells you there is no commission, this should raise a red flag. For example, many brokers will tell you this when you buy a mutual fund. Keep in mind that many mutual funds pay the broker a commission. In return, you pay a higher expense ratio in the mutual fund. While the commission is hidden, you pay for it. Read the prospectus carefully before investing. It explains the commission and fees. After you open your account, review your statements regularly, and if you don't understand something, ask your broker. If you don't get a satisfactory answer, ask a branch manager or supervisor. Make sure that your broker does what he or she told you they were going to do. For example, if you understand that your account would be charged an annual fee of 1%, but you notice the fee being charged is higher, question it immediately. Meet with your broker regularly, quarterly if possible, but at least annually. Keep yourself apprised of what is happening in your account. Make sure your investment objectives and risk tolerance are documented, and keep a copy. If your broker recommends something that doesn't seem suitable, question it. For example, if you tell your broker that you want to preserve your capital, but the broker recommends an aggressive growth mutual fund, this probably isn't suitable. You need to remind your broker of your objectives and risk tolerance. Finally, write emails confirming conversations. Keep in mind that you can never fully trust your broker. It is important for you to keep an active role with your money if you want to keep it and grow it.